What's up guys, Lee Ryder here, Crypto Didact, and in this video we're going to continue diving into the market auras. This video we're going to cover market aura number 5, which is cycles. So without further ado, let's get to it. Alright guys, well welcome to market aura number 5, cycles. This is my favorite study because I think this eliminates the most mistakes when traders realize when to wait and where in the cycle they are. So let's get to it. Like always guys, let's get the definition out of the way. So what is a cycle? Well, a cycle is defined as a series of events that are regularly repeated in the same order. You can see here that I have a list of all the cycles that exist in our lives, and they are numerous. Now this is important to understand, and when you start to think about it, you'll notice that cycles exist everywhere in our lives. From the examples I'm going to give, which are easy, to human life cycles, to war cycles, economic cycles, the seasons are cycles. Our life is very cyclical, even down to like cellular level, right? So this is cool stuff. Let's keep going. So here's a first example, water cycle. We probably all learned this in school, right? About how the water cycle works and how a drop of water that you're drinking today could be is the same water and could be the exact same water that we drank, millions of years ago, or that were on Earth millions of years ago. So there's an example of cycles. Another example, and we'll talk more about this later in our psychology section, is goal setting. This is exactly how you cycle through goal setting. You reflect on what you're trying to achieve, you set a goal, you implement learning, you evaluate the outcomes, you go through experience, and then you start the whole process all over again. And a more scientific note, we have the sine wave. When that motor is moving and creating the electrical current, it does so going from positive to negative voltages. And you get this beautiful sine wave right here. So those are some examples of cycles in our daily life. And now I know those are simple examples, but all I'm trying to show is that cycles exist everywhere. We've been learning them since we were little kids, and they will continue to exist. And once you understand that, and when you understand that the market is all it's doing is measuring that human component, you will also begin to realize that humans operate in the same way, and they deploy capital and withdraw capital from the markets in specific manners. So let's continue on. I've got some charts I want to show y'all. They're going to be Bitcoin from Bitfinex. We're going to look at 1-hour charts and daily charts. I'm also going to show y'all about extending out your indicator time frames or the settings in the indicator to make them more sensitive or less sensitive, and you can kind of get longer cycles or shorter cycles. So let's get into it. So this first chart we're looking at is going to be, let me get my little drawing tool. So as you can see, this is a 60-minute chart of Bitcoin USD. Right here I have RSI with normal settings. It's 10 and 3. And then down here I've made a longer one where it's 133. And this is what I mean by stretching out your cycles. So as we've talked about before, we have these moves in the market that resemble waves, and you can call these cycles, because what is happening here is people are selling off here, they're buying here, selling off, right? Y'all can kind of see what's going on. And what these indicators do, these cycle measurements, so this is RSI, it's measuring overbought and oversold levels, and I like to use those to determine cycles. Now as you can see, for this leg right here, it's pretty noisy here, right? Like it's not super clear what's happening. But if you look at it here, this is it's much simpler to understand. Okay, well, it doesn't really start to break until here, versus here, you're not really getting that. So let me clear the chart. Okay, so now we're gonna, as we said, we're gonna cut this section down and look at it in a little bit more detail. Okay, so this is that section that we were just looking at, and you can start to see that there's these little microstructures that exist, and these are little mini cycles. I'm sure that's apparent. And then you can see right here our normal setting RSI, is showing you that it's kind of reflecting those little mini cycles, but this longer one is showing you that we're kind of trading just a little bit flat and there's nothing really to be had. So this is an example where you want to vary your indicator measurements and you don't want them all sensitive or not all of them not sensitive or desensitized, because what you can do is you can start to stack these on top of each other, and when both of them are lining up, then you know you have a better odds of a good trade. And then next, here's a more recent example. And here's the same thing where you can see that we have these cycles that are happening in the market. And the standard, it does a fairly decent job, but there's a lot of false breaks and stuff in here, versus when you stretch it out and you look at it, this becomes a lot more clear about what you're trying to see, you're trying to see the cyclical nature of the market you're trading. And now these are going to be different for every market. That's what you have to do your statistical studies and find out what is relevant. But this is the general idea. You want to use multiple settings and multiple sensitivity settings. And then here's one I want to give a more real life example of how I tend to use this. And so this is going to be a little bit more specific, and we're going to add some stuff that we used in the past, like trend lines and trend line breaks. But I want to show how I like to use a longer time frame when I'm doing my top-down analysis to help me determine that I'm on the right side of the trade and I'm not just looking at the chart and just seeing what I want to see. So as we can see here, we are now on the daily, and I still have my long desensitized RSI. What I've gone ahead and done here is I've drawn some trend lines, and I have labeled the peaks and when the trend line break occurs, which signals that a reversal is coming. So we have a reversal here, 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 and then this one, this is still forming. So this is the current as of today. That's what's happening. So I don't know where this is going to form yet. This will likely come up, and then I will have to readjust my line. You can see how it's a little steep, and how most of these are not steep. They're mostly at like a 45-degree angle. So this is how I like to use it. So if you look, if you sold here and bought here, and then sold here and bought here, and sold here and bought here, and sold here and bought here and sold here, you would have done pretty good for yourself. But that's not really a tradable strategy. What is a tradable strategy is understanding this concept of cycles, and when this event occurs and when this event occurs, you can start to dial down on your chart and look at lower time frames. You can apply different analysis and look at your trading strategy as a whole, but this makes sure that you're not right here and thinking that it's a really good buying opportunity, because even though on the chart it looks like it might be, the market hasn't told you that the cycle's over. It has more to go. It has more to turn over. So that's pretty much it, guys. That's cycles. I know it was basic and brief, and I kind of fumbled through this one, but we'll get more in detail, and when we start putting our trading strategies together, these cycles will be hugely important. So I urge you to go into your charting platform and play around with different settings, pull up lots of time frames, look at different instruments, and see that these the cycles do work and do play out. And it's not just about like going online and finding some trading strategy that says set your indicators like this, because that's not really true. Every market trades different because you're measuring that human component. So thanks for sticking with me, guys. I hope you enjoyed it, and we'll see you again.